Okay, well, another hedge fund bites the dust. Cotillion Capital, run by William von Muffling, closed its doors earlier this week after missing the spring's rally and facing a second year of losses. Our next guest says, though, the fat days for hedge funds are over, and he should know. He is famed money manager Stephen Leuthold, who's most known now as a longtime bear who has just turned bullish. And he's joining us from Minneapolis. And Steve, always great to have you. Nice to have you on a Friday morning. A good start to the weekend. Okay.
Well, Betty, it's nice to be here.
Well, Steve, before we get to your market outlook, which I'm sure a lot of our viewers are very interested in, you say that this whole the whole era of high fee days for these hedge funds, you say that it's over now, right?
Oh, no, I don't think it's over, but it's changed quite a bit. And the reason a lot of people are getting out of this and closing their firms is they have high water marks, and they have to get back to that high water mark on their fund before they can start taking 20% of the profits. So if you're down, let's say, 20% or 25% last year, you've got to be up 25 to 30%, 33% just to get back to your high water mark. And nobody gets paid bonuses, big bonuses, till you get above that, where they're taking a percentage of the profit. So it's for people that took a shellacking in the last year, it's a long way back up before they make the big bucks again.
Yeah, how long do you think, though, Steve? I mean, it's taken, we've seen a bit of a shakeout, but I almost feel like we're just in the beginning of it.
Well, I think we've had, I think about 1,300 hedge funds close in the last 2 quarters, so that's quite a few. But at the same time, we have a lot of new people getting into the business, and they're coming from banks and the good traders and good analysts out of the banks, because many of them are being limited as to what their bonuses could be, and they look across the street and see the fat city that could be there with a hedge fund, and they're moving.
Right. Now, one strategy that's worked for some of these hedge funds is a long-short strategy, Steve. I want to ask you, though, as you're seeing the short side, the steam there get less and less. I mean, is this, are the shorts, are they losing ground at this point?
Oh, I think so. It's been a very difficult market. We run a fund that's always 100% short, a mutual fund called a Grizzly short fund. You can't make money when the market's going up in a short fund. And as a result, a lot of these people that have been running both long and shorts are saying, oh, my God, this is tough. I might as well just stay on the long side. Beating the market on the short side is really hard. What
have you thought about with your own Grizzly short fund? I mean, it's down, I think, about 24% so far this year. Have you thought about doing anything with that?
No, not at all. We've had the fund for, 10, 15 years. When the market goes up, we lose money. When the market goes down, I think last year we're up 75%. So it's people are supposed to be using it to hedge or to defer taxes and so on. But it's, I think I told people, probably 6 months ago, don't buy our Grizzly fund because the market's too cheap.
And how long do you think, though, because we've got a guest on later on, Bob Prechter, who he expects this bear market, I should say, to last for like another 18 months or so. I mean, how long do you think it'll take for the shorts to really sort of get to the bottom of this loss that we're seeing?
Oh, I actually think the market's going higher. I think you're going to see 1,100 by the end of the year. I wouldn't really start hedging or getting net short in this market until year end and maybe through mid next year. I think the thing we have to worry about is really high level of inflation, currency debasement inflation, but that's probably 1.5 to 2 years off. I mean, we own a little gold and a little silver in our asset allocation funds, and we probably will gradually be building those holdings, because I think there really is a risk unless the government starts pulling in some of this liquidity.
Yeah, Steve, we've talked quite a bit about that, and we're going to talk more about that after the break, including, as you just mentioned, you've got your hold on that 1,100 target by the end of the year. So has anything rattled, Steve Leuthold, that you've seen with the pullback in the past week. We're going to talk more with famed money manager Steve Leuthold. Stay with us in 2 minutes. Okay, well, we are rejoining famed investor Steve Leuthold, founder and chief investment officer of a Leuthold Group. And, Steve, equity futures have just closed, and they do indicate a rally for this morning, but we've had some pretty sharp losses this week. And as we just heard from you, you still stick to that 1,100 target for the end of the year with the S&P. Why are you so, why are you so convinced by that? Because some are saying, this pullback is just a sign of things to come.
Well, it's been a relatively minor pullback, and we had another one at the beginning of May that took us down. And so I don't think it's going to run more than 5 or 6%, and it might be over right now. The market has a head of steam. The momentum work, the technical work seems to be very positive. Mm-hmm. But in addition to that, the economy is certainly improving. I mean, the signs are there, and I don't want to use that terrible term about green grass or whatever it is. But
green shoots, I think.
Green shoots, right. But, too much fertilizer can kill a green shoot, too. I mean,
yeah.
So,
and we have seen that possibly with some of the regulation, right, Steve?
Oh, that's right. That's right. And I think that as the government gets more involved in trying to help, sometimes that is going to be a hindrance. So I would hope that we see a lot of these programs that are pulled back as it becomes more obvious the economy is improving. And I was really glad to see the TARP money, some of the TARP money getting paid back, about $70 billion, and I think more is coming. So the system is working again. And I think the market isn't overvalued. It's not undervalued. It's about at median valuation levels. But I do think with more good news coming, you're going to see, after all, 1,100 isn't that far from here anyway.
No, it's about 200 points from where we are right now, Steve. But I want to get down to what you're buying these days. Because, in fact, I was interested to know in your latest report that you've added a new 8% position in diversified financial services. The biggest move, or the first move, I should say, since the last summer. So, of course, everyone's going to want to know, why are you now buying into financials?
Well, about 35% of that was in foreign companies, too, I should note. But with our quantitative work, which we really depend on in terms of our group selection, financial services, diversified financial services, is our very top-rated group out of 130 groups. And we had been underweight financials for about a year and a half. In fact, we'd had zero in financials. And I thought, well, it's a top-rated group. It's been attractive for 3 months in our work, and I guess I maybe better get on board. But we were quite careful in terms of the ones that we took, and so I think they're going to do well.
And foreign, as you mentioned, a big part of that. I mean, you are actually very bullish now in emerging markets. I think you've got the biggest exposure in history at your firm to emerging markets.
Right.
Why are you so bullish?
Well, part of that is our concerns 2 years from now about the dollar. And by investing primarily in Asia, we think, and we're using local currencies, we think we will have some protection against hyperinflation in terms of currency debasement with the dollar. So that's that's one of the reasons. But the two other reasons are the foreign economies, the emerging ones, especially in Asia, are potentially much faster growth than they are here.
Okay, Steve, always great to talk with you and to have you with us on the program. Steve Leuthold, the investment manager of Leuthold, Whedon.